markets took a turn for the worse today, with the S&P 500 falling a total 9.51%. Overall, this means that the S&P 500 has almost dropped 27% from its peak, which means that the S&P 500 is in that bearish territory. And it really puts into question if we have started a recession now. As you previously saw in the past months, the yield curve inverting, as well as the performance of the stock market and everything that's going on around the world, it really seems like a recession might be starting and that this might be the first quarter. In terms of sectors, the primary driver of the lowering is the energy sector, which fell a total of 11.6%. The Dow Jones didn't fare any better, falling a total of 9.99%, which means its total loss from its peak is at that 28% mark. Even looking at that past year, the Dow has fallen 17% from a year ago, which really isn't a good look. The Nasdaq was down 9.43% and has total fallen 26.6% from its peak and has even fallen in that negative year territory of 5%. Canada didn't fare any better and is actually doing worse, with the S&P TSX falling 12.35%. This means it's fallen over a total of 30% since its peak. Really not a good look for Canada. Also, the sectors that really impacted it were the energy again and health. Overall, this is not a good look for Canada going forward and really puts into question if Canada is entering a recession or is currently in it. Europe didn't fare any better, with the FTSE dropping 10.87%. The Nikkei didn't do quite as bad, but still had a terrible day, falling 4.4%. Oil continues to tumble as well, with WTI falling just about 6% down to that $31 mark. Brent fell even further, down 8.52%, is now currently trading at $32.74. Even by looking at that differential, normally you see about $5 to $6 differential. It's kind of interesting to see. And if you thought your money would be safe in gold and that you'd actually get some return there, it doesn't be looking that way, as gold fell 4.43%, making a 5-day loss of 7.34%. I'm pretty surprised to see that big drop in gold overall. Looking at interest rates, you expect a lot of that money to be going into the treasury markets, but overall, in general, rates are pretty flat or if not up, as the Canada 10-year is currently sitting at 61 basis points. The most notable change, though, is in the Canada 30-year, as it's currently at 1.14%, going up about 20 basis points. A lot of this has to do with what's going on with the liquidity and treasury markets, but I'll get into that later. In the currency markets, the US dollar and the Canadian dollar actually had pretty strong days, rebounding from that trouble they had when oil prices hit. The Canadian dollar, though, is at pretty low versus the US dollar because it's currently at that 72.3 cents mark. The losers on the day was the Australian and the British pound, as they struggled to in the day, falling over a percent. COVID-19 continues to dominate headlines as cases reach 134,088, deaths reach 4,964. Big increases coming out of Italy and Iran again. Italy adds a total of 2,651 cases, which is a pretty big jump, as well as new deaths of 189 and actually surpassed that 1,000 mark level. The US has taken action to try and stop the spread by announcing that they're suspending most flights from Europe for the next 30 days. The NBA has also suspended the rest of their season as one of the players ended up getting the virus, unfortunately. Also, Iran is needing some help and is actually asking the IMF for a $5 billion loan to help cope with the problem of the virus. The New York Fed today took action in what they called a temporary disturbance in the treasury markets, as there has been a liquidity issue with US Treasuries, as everything's going out of stocks right now. The New York Fed has committed to offering $500 billion in 3-month repos, as well as another $500 billion in 1-month repos. This is added to their total of their already committed $175 billion overnight and $45 billion in the 2-week repo. Overall, they're hoping that this will help markets out, and they're also planning on widening quantitative easing. So overall, they were planning on purchasing about 60 billion a month in securities, but they're moving that range that they're going to buy into other coupon-bearing securities. With the New York Fed injecting a lot of money into the repo markets, it comes into question what is really going on in the treasury markets with all this liquidity. So basically, there has been a lot of money trying to go into treasuries with not essentially not as much people wanting to sell, and shows that big jump in prices in that treasury markets as a 10-year treasury has gone as low as close to 30 basis points and as high as about 80 basis points in about a week spread, which is pretty significant if you look at different times how much the treasury actually moves. So hopefully what the Fed is planning on doing will end up working out. US wholesale numbers came out for February, with prices falling 0.6%, which makes it one of the biggest declines in the past 5 years. Overall, this is a sharp contrast to the previous month of January's 0.5% rise. Core inflation, which excludes energy and food, was down 0.3%. Over the past year, though, producer prices have gone up 1.3%, while core prices are up 1.4%. Also in the news, yesterday the government announced that consumer prices were up 0.1% in the month, and over the past year are up 2.3%. The biggest changes come from energy prices as they were down 3.6%, with gas prices being down 6.5%. Food prices have also dropped pretty significantly, 1.6%. It's a pretty big drop when you consider that that's probably not where you expect the drop to come from. Surprisingly, jobless claims in the US fell the past week by 4,000 down to 211,000, which is some decent news for the US considering all that's going on. They kind of need some good news. I thought this article was pretty interesting to really know on the street what people are thinking and how they expect the S&P 500 to perform. So RBC Capital Markets strategist Lori Castlevania came out saying that she thinks the S&P 500 estimate at the end of the year will be 3,279, which is down from the previous forecast of 3,400. That is still pretty high though when you consider the S&P 500 is trading around that 2,500 mark. So that's got to go up about 750 points to actually get to that point, which would be a really good return and could mean that this is a really good time to invest, especially if you take their advice. Overall, though, it's hard to say. As another analyst from Credit Suisse changed their target to 3,300, down from 3,600, as well as a Goldman Sachs analyst I previously mentioned, who now expects that it'll only be 3,200 by the end of the year. Although some of them kind of expect that it might go down in the middle of the year still. We haven't necessarily seen the bottom, but overall, they all expect that it'll have a pretty steep climb by the end of the year. I'm not as confident that it'll go back to those levels. I think that we will see some recovery, but it's hard to say by how much. It might take a little longer than that to get back to that 3,300 level. In company news, Empire, the owner of Sobeys, the grocery store, reported their quarterly earnings. This is actually kind of some good news. They actually had a decent quarter with net income up to 120.5 million from a previous year's 65.8 million. That's an earnings per share of 45 cents compared to previous of 24%. Sales also had a decent increase of 6.4 billion, up from 6.2 billion the previous year. Same-store sales were up 1%. Excluding fuel, though, they were only up 0.8%. Adjusted earnings per share were 46 cents, up from 27 cents the previous year, which is exactly in line with analyst expectations. Overall, a decent quarter for Empire, kind of in line with what was expected, but overall some good news when you compare it to what else is going on. I imagine their stock is probably pretty far down today when you consider the market, but overall, decent performance. The news in the energy market just never seems to end, with a new purchase happening as TransAlta and Tidewater plan to sell their Pioneer pipeline to a subsidiary of TC Energy for a total of 255 million. Tidewater is doing this primarily to try and pay down their debts as they previously had a rough quarter where they lost 13.8 million, which is compared to their previous year's profit of 13.2 million. So overall, a lot of struggles in that industry. So hopefully they can turn it around. I guess that depends on whether the political stuff will allow them to. More good news in earnings as Quebecor announced their Q4 earnings, where they plan to increase their dividend to 20 cents a share, up from 11.25 cents a share previous. That's a pretty big jump overall. So the performance was their net income was 145.1 million, which is a significant increase from previous years, 117.5 million. Revenue was also up a total of 1.14 billion, up from 1.09 billion the previous year. They had adjusted earnings per share of 63 cents compared to the previous year 52 cents, which beats analyst expectations of 60%. Overall, though, it's pretty good to see them do well, especially when you consider the market they're in. That media telecommunications market's pretty rough right now, and overall, you don't really see much growth where a lot of the companies are having troubles with advertising. It's good to see one of them actually be able to do well.